Hi everyone, in this video I'm going to reveal my top FinTech stock to buy in November. Now before we get into it, October was a better month for stock market investors after a brutal year in 2022. I don't expect the volatility to end in November. I don't think it's smooth sailing ahead for the rest of the year. I think volatility is here to stay as long as the Federal Reserve is raising interest rates and as long as inflation is stubbornly high. That said, if you do want to begin buying stocks in November, I'm going to recommend my top fintech stock here. Now remember, financial technology is innovating how people pay, borrow, and save, and it's a massive industry with hundreds of billions, if not trillions of dollars in transactions every year. And so the businesses in this arena have the potential for incredible gains. All right, so my top fintech stock to buy in November is PayPal. PayPal. For PayPal, one of the reasons I like this stock is because revenue has jumped from 5.7 billion in 2012 all the way up to 25 billion in 2021. So a nearly 5 times increase in revenue there over the last decade. Meanwhile, operating profit margin has averaged 16.1%. So it's not like the business is sacrificing profit margins in the attempt to grow revenues, to grow the top line. Earnings per share has exploded from 7 cents a share in 2012 all the way up to $3.52 a share in 2021. So the company is figuring out how to deliver efficiencies and scale, and as revenue is growing, profits are expanding, and I like to see that. That's one of the things I like to see in an investment. When revenue is growing, I like to see profits grow, and PayPal is demonstrating just that. 429 million active accounts is, evidence of really good customer value, or the perception of really good customer value. Otherwise, these customers wouldn't keep their accounts open with PayPal. These are 429 million active accounts, and as a result, PayPal has achieved a great net promoter score. A great net promoter score. That means that customers that are using its platform believe it to be very useful, believe it to be worthwhile, and they're giving it high ratings. Still, all of that has to be offset with the risks in PayPal that are palpable, especially the latest risk, which is its user agreement fumble. If you're not aware, PayPal initiated a new user agreement that said users could be charged up to $2,500 for spreading misinformation, and that's caused uproar among PayPal customers. And we don't know yet how many customers have deleted or signed off their account because of this. We'll know more after its next earnings release. So that's a risk right now. The next is that competition is increasing for PayPal. They have other online payment providers such as, and even traditional banks like Bank of America is launching their own new services like Zelle for payment transfers and similar services offered by other providers. And so it's not going to be as easy to gain market share for PayPal as it was between 2012 and 2017. These next 5 to 10 years are not going to be as easy as the previous 5 to 10 years were. Finally, one of the main reasons why people use PayPal is for buying things online, for e-commerce payments. And so as consumers are now changing their shopping behavior, not spending so much money online anymore, buying more things away from home, like going to restaurants, going to theme parks, concerts, and spending money on travel. That's taking away online sales, and that's taking away the gross merchandise volume of transactions that PayPal takes a percentage of. That's how it relies on gaining revenue. So there's risks. There's risks to offset all the benefits of PayPal, but arguably those risks may be maybe, I say, reflected in its valuation. I see a chart here. I'm showing the price to free cash flow for PayPal at 19.6 is just about the lowest it's been going back just before 2016, and the price to earnings of 49.6 is right about the average valuation it's been going back until before 2016. So those risks could be somewhat priced in. If you were a little bit more patient, you might be able to get PayPal at a better valuation throughout, maybe towards the end of November instead of the beginning of November, if you wanted to, wait a few weeks before purchasing. The Federal Reserve is set to meet this week, early in November, to again rate, and they're widely expected to raise interest rates. When that happens, that could put downward pressure on stock prices and the stock market, and therefore you could get PayPal at a better valuation. However, if you're really interested in buying FinTech stock right now and you want to get in right now and you have this fear of missing out, then I would suggest PayPal as my top FinTech stock to buy. All right, so thank you for watching, and tune in next month for the next installment of my top stock to buy for the month. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.